Sticking with the dollar story, we know that that's been a huge influence over the price of gold recently and other commodities. But is the only driver the dollar, or is there real demand behind that gold story? For more on gold, we're joined by Carsten Fritsch. He's a commodity analyst at Commerzbank, and he's joining us this morning from Frankfurt. Carsten, thank you for your time, sir. So, gold, can it continue to rally, assuming that, say, the dollar does not continue to decline?
I think that will be difficult. Most of gold strength was coming from dollar weakness, and gold and other currencies didn't move much. There was one exception last week when that announcement came out from India that bought 200 tons of gold from IMF in late October. But apart from that special factor, the dollar remains the key factor driving gold prices.
So the demand
that's also
story,
the reason why we don't expect
the demand story behind gold right now.
That's also
I'm sorry, Carsten. The demand story behind gold right now doesn't justify perhaps the price where it's trading?
Actually not. What we see this year is the first increase in gold mine production in, say, 10 years or so. And the supply from gold scrap will also spike up this year as a result of rising gold prices. On the other side, durable demand will see a considerable decline this year. This will only be offset by rising investment demand, but the main strength was coming in the first quarter, the first half of the year. That leveled off considerably in the last couple of months or so.
Yeah.
And another factor was speculative demand. If you look at speculative and net long position, that is still close to record high. And there's also risk that we could see some profit taking from that side, putting gold under pressure.
Hey, Carsten, just very quickly, I wanted to ask you on oil, the IEA cutting its long-term forecast for global oil demand. I wanted to get your reaction to that.
I think that confirms our view that the upward potential for oil prices is limited, not only in the short term, but also in the medium to long term. And so we expect the oil price falling towards 60 at the beginning of next year and only rising marginally in the course of next year, because oil demand outside China is still rather subdued and will only recover very slowly.
All right, Carsten, we appreciate your perspective on both crude and gold. Carsten Fritsch, commodity analyst at Commerzbank in Frankfurt.